I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Netflix, a story of subscriber growth and succession. We dig into the earnings and the executive changes as we learn Reed Hastings will step down as CEO.
You have Netflix. This was the big headline, not that they beat subscribers in the fourth quarter, 7.7 million, greater than the 4.5 million forecast, but that Reed Hastings is stepping down as co-CEO. Greg Peters gets a promotion to co-CEO. Reed Hastings remains as executive chair. This is a company that he has been at the helm of for 25 years after founding it in the 19s out here in NorCal. And it's really interesting to see that actually they seem to have had this in place for a long time. Initially, the stock fell, but as you can see, we're higher by 6% in after hours.
Let's dig in on all of that, because it's interesting. We're getting succession planning and a chairman remaining over at Texas Instruments, and similar for Netflix. Succession planning, unlike over at Disney, many would argue. It's interesting, therefore, to bring on Lucas Shaw, who so intimately understands this company and indeed the inner workings of Reed Hastings. He himself, of course, a man who's focused on culture in so many ways, Lucas. What do you make of who now steps up, with Greg taking the co-CEO reins, and ultimately who's going to have the ultimate decision-making power here? Because he remains as executive chairman.
Yeah, look, my assumption is that Reed will say that Ted and Greg get ultimate authority. They are now the CEO. Obviously, as chairman of the board, as co-founder, as a major shareholder, if there were some huge transaction, Netflix decided to sell itself, buy something significant, I imagine Reed would get more involved. But he has been gradually stepping back from the day-to-day operations of the company already. He delegated most of the Hollywood stuff to Ted. He's put Greg in charge of these two big initiatives, advertising and password sharing. And I think that's how the company is mostly going to keep operating, with sort of Greg looking at a lot of the kind of product and strategic fit, Ted looking at a lot of the the more entertainment-focused and programming operations.
Hey, Lucas, let's think about the forward-looking nature of this, because Greg Peters kind of was already leading the charge on the ad-supported tier, already leading the charge on the crackdown for password sharing. Ted Sarandos, the man about Hollywood, doing the deals, thinking about content. Given the numbers we just got, which were strong beats, right, subscribers, and on the top line, I suppose, bottom line a bit weaker, where will they focus their energies going forward for 2023?
It's going to be continued execution on advertising, because remember that ad tier is only 2 months old, so that'll be kind of improving some of the technology behind it, targeting sales. It got off to a relatively slow start, but I think they like what they're seeing. It'll be rolling out this whole password crackdown, which I think is going to start this quarter and really ramp up in the middle of the year. It's going to be kind of continuing to try to improve programming in certain areas. They've done really well recently on English language television programming, not quite as well on the foreign language television programming. I think they want to keep improving their hit rate on movies, because they release a lot of movies people don't watch. And then there's the whole gaming piece of it, which is still a small part of the business, but they're investing a lot of money into it. I don't think you're going to see a ton of news around that in 23, but it is something that they will continue to talk about as sort of the future. The one point I do want to make is, while they had a really strong final quarter of the year, at least in terms of subscriber growth, the thing to keep in mind, just sort of big picture, is that for the full year, they did still post their worst subscriber growth since 2011.
All right, Bloomberg's Lucas Shaw, great reporting on what's changing at Netflix and good analysis of the numbers, which I think we need more of. So let's bring in Brandon Katz, industry analyst at Parrot Analytics. It's interesting, the third-party data suggested that actually in the final 3 months of last year, Netflix is facing greater competition from the likes of Warner Discovery and Disney, and actually demand overall is starting to pull back. Well, when you saw those net subscriber ads for Netflix, 7.7 million, what's your reaction, Brandon?
I'm still not totally surprised. I mean, Netflix has always been savvy with its guidance. It likes to set the stage for positive narratives, which we are now very much engaging in. And we look at Netflix from our angle. It is still the streaming industry leader. It has the most global subscribers. It has the most in-demand overall catalog with U.S. audiences in all of 2022, and that includes original and licensed movies and TV shows. And it also still leads the entire industry in global original demand and U.S. original demand. So yes, that is shrinking as it cedes ground to, very hungry competitors that are gaining market share, but they still have a massive, massive lead. And I think all the doom and gloom around Netflix last April perhaps a bit premature, as we're seeing now, even with what Lucas accurately pointed out, their lowest subscriber total in a year since 2011.
Lucas, at the end of his Bloomberg News report, summed up the comments about the ad-supported tier, and they were a little bit muted from Netflix. They're pleased with the progress on the ad-supported tier. They're saying that it's bringing in cost-conscious consumers. Do you think that that was part of the beat when it came to subscriber growth in the last 3 months of last year?
Yeah, and they even pointed out in their letter to shareholders that they aren't seeing a lot of conversions from premium subscriptions to ad tiers, which is exactly what they wanted. They want the ad tier to expand the total addressable market for Netflix, and particularly at a time when consumers are weighing concession fears and maybe recession fears and maybe a little bit more cost conscious. Now, yes, not the fastest, most explosive rollout, but this is going to be a must-have for all advertisers looking to get into connected TVs and digital TVs. So we are going to see that grow throughout 2023. And we got to remember, they turned around from years of an anti-ad stance and created their ad tier in only 6 months. So there is a lot of upward potential and room to grow here.
Yeah, interesting. In that earnings statement, they said the early results, they say they're pleased with, but there's much still to do. Can you, Brandon, in any way talk about sort of the culture of innovation over at Netflix? Because that is, of course, what we've come to know, having read the No Rules Rules book by Reed Hastings himself. I mean, it's all about the way in which they set apart of different corporate culture. Now, it's interesting to compare, shall we say, succession planning with Disney Plus versus Netflix, and they're kind of opposite ends of the spectrum. But we are seeing Disney Plus and Warner Brothers Discovery taking chunks potentially out of market share from Netflix. How can Netflix ensure that it's standing in good stead to keep on growing, keep on innovating, keep on personalizing?
It's funny because Netflix has always fancied itself as the greatest disruptor in Hollywood history, but now it's really reached a point where it is recreating the playbook of its linear rivals instead of vice versa. So the market emphasis has shifted, obviously, towards profit and revenue, which they are clearly emphasizing, and their strategy and public narrative has followed suit. So clearly they are adjusting to the times. And frankly, they're in a better financial situation than every other major streamer. They're the only one really that's profitable at the moment, with Disney Plus, HBO Max, Paramount Plus, and Peacock all looking at 2024 or beyond to finally get into the black. But in terms of continuing to grow, they're really, really going to emphasize not only the ad tier as a more cost-effective alternative to cost-conscious consumers, not only password sharing, where if they convert just 10% of the 100 million or so password shares, that's 10 million new subs, but they also want to continue investing in non-English content and create not just regional hits that resonate with the Latin American market or Asia Pacific, but that travel globally. And we're seeing that steadily increase in frequency over the past several quarters. Yeah, really interesting to bring up the global perspective of this business. And I think what's really interesting is the way in which investors have started to buy in. Ed, it was you that was on Twitter just saying, look, we're off more than 90% up from the lows that Netflix's share price had hit. Analysts looking far more on the buy side than they are on the sell side in terms of ratings. Brandon, from your geographical perspective, which levers can they pull? Where's going to be growing the most at the moment? Is it LATAM? Is it Asia vis-a-vis US, Europe? Yeah, I mean, Netflix has years-long unrivaled investments in overseas content regions, so they really do have a lead on the competition in that regard. Asia Pacific has been their biggest growth arena over the last 5 or 6 quarters, so they're going to continue to hyper-focus on that. Obviously, we've seen South Korea become a major international hub for content, both as regional hits and hits that can hopefully translate to the domestic audience as well. And then there's the big white whale of streaming. Everyone is trying to crack the code in India. Now, Netflix has gotten off to a slow start there. They're behind Amazon and Disney Plus in terms of market share, but they continue to experiment with mobile-only plans, with 6-month and annual plans that offer discounts, and they continue to invest in original content that covers a variety of regional dialects. So they are going to hyper-focus on that area while still serving the areas that have proved to be fruitful to them, such as Latin America.
All right, Parrot Analytics industry analyst Brandon Katz. I think we're going to be having this conversation about the future of Netflix for many weeks to come. Thank you so much for joining